Good morning, welcome to the Market View for Thursday, the 17th of July 2014. Starting off with the 30-minute chart for the British pound yesterday, you can see that we have three potential signals that weren't filled, and the reason for this is very simple. The British pound yesterday traded in a massive range of just 38 pips. It has to be one of the quietest days that I've actually seen in the British pound for some time. So a very narrow trading range for the pound yesterday, which resulted in no signals. And again, I have to reiterate this, there's not a lot we can actually do until the market decides to shake out of this low volatility, quiet trading range that we're experiencing at the moment. It's very quiet indeed. I mean, you have to look at the overnight market. You can see that we've traded from this sort of low to this high, which amounts to 6 pips, so very quiet. So 6 to 10 pips is the overnight trading range for the British pound as well. Like I've said before, the markets will eventually wake up and there'll be trade after trade after trade with the large trading ranges returning, but at the moment the market is quiet. And the longer it goes on, the bigger the moves will be once the market does wake up from this sort of coma-like state that it's in at the moment. Moving on to the daily charts, you can see yesterday just very quiet and very narrow trading range compared to the previous day where we saw the release of the inflation figures. And again, just stuck in this sideways range. There's not a lot else I can really say about it. I'm just going to throw in a couple of fib retracement lines. We'll just start off with the low there. We'll put some down to the low side just to see where the range is at the moment, and it's not too dissimilar from the horizontal line that I've drawn in there, 170, so it's a 171 sort of area, and then to the upside we've got 171.58, so that's sort of 3/4 of the range of what we've got at the moment, 171.58. So you can see it's only a 50 pip range in this market at the moment. So again, not a lot we can actually do to alter things. Unfortunately, we're at the mercy of the markets. In the news for today, and let's go back to the top there. We've got CPI from the Eurozone, unemployment claims from the US at 1:30, so nothing after this, so it could be a quiet morning. And then we've got building permits and Philly Fed manufacturing index out at 3 p.m. So again, I think the last 2 weeks we've seen not an awful lot of economic data being released as well. On the Dow Jones front, chart's going to look slightly different this morning because for some unknown reason I've received the message that my subscription has expired to CRB that I use. It hasn't, so I need to get in touch with them. But here's the chart off their website. This is from the CRB commodity charts website, and this is the Dow Cash, and you can see yesterday the market up 77 points, making a new historic high of 17,138. So again, in no man's land once more after Yellen had spoken for the last 2 days. Obviously the market found what she had to say positive. I don't know why, but it has, and again we see prices heading up now towards the 17,200 there for the Dow. In the implied volatility, we can see that we've turned around on the implied volatility down to 842 and up slightly for the historic volatility at 6.46. So again, we're still down in these lows and expecting a move from this market also, but it's a case of not being able to name the day or date and just waiting for the market to show its hand. Okay, that's it for today and for this week. As I said earlier on in the week, there'll be no market view for tomorrow. So all things being equal, I will see you in Monday's market view. Have a good weekend. And as ever, thank you for your support and also for watching.